Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Swiss franc as we enter into Friday's trade. Let's do a quick review because I think it's important in analyzing what this pair is doing, where it might be going, and I'll tell you why. Here we ended the week right around this level right here, around the 89.18-ish so level, and on Mondays and Tuesdays early trade we started to move lower. And on Tuesday, we fell below this level right here. This is a 100-day moving average. And you can see that the break below that level should have led to lower levels, and it did for a little bit, but it was just a little bit. And the price failed on the break to the downside. So guess what? Sellers had their opportunities. They took their shot, and they missed, and the price started to move to the upside. When the price moved higher, where do we go? We went to the 100-hour moving average, traded above and below it at the beginning, and then we started to use that level as resistance. The sellers were trying to keep a lid on the pair and push back to the downside. They couldn't do it, and the price moved above the 100-hour moving average and moved up to this green line. This green line represents the 200-hour moving average. And again, it tried to stay below it, but then moved above it, and then eventually moved higher. And then we moved to this swing area through here, where we had a number of different swing lows and highs, and we moved up to the high of that swing area, found sellers, and where do we go? If it went right back down to the 200-hour moving average and found support against that level, the subsequent move to the upside was able to get above that swing area. But what did we run into? We ran into the 200-day moving average. That's a green line in this chart. And what did we do? We found sellers against that level, and it pushed the price back down to this swing area here in trading today. And that's where the support buyers came in, and we pushed the price higher, traded above and below the 200-day moving average, but ultimately moved up to the 38.2% retracement at 0.90237. And what do? We found sellers against that level, and now we are at where we're at right here. So what the lesson of that is that these technical levels provide levels where you can put your flag in the ground. You know, you want to see, when you trade, you want to find a level that you can lean against, that you can say that this is where I want to buy it. I want to buy it against the 200-hour moving average, and they did right there. And that's what you have to try to do. I want to buy it right here against the low of this swing area, and they did. And that's what you want to try to do. I want to sell against the 38.2% retracement and take my profit and go away for the weekend. And they did against that level. And so that's what you have to try to do, is look for those levels that are going to, give you the advantage, give you a opportunity where you risk a little and make more than a little. So that's a lesson here in trading today. So guess what? If we're going to follow that progression, we got to get above the 38.2% retracement to increase the bullish bias. Alternatively, we have to move back below this level to increase the bearish bias. So we're in between those levels. Maybe we have the 200-day moving average as a level of potential support, or even the high of this swing area right here. Traders can lean against that level in hopes that, hey, the 90 level is going to hold and we're going to push to the upside. That's where traders, that's where your decisions come into play, and you wouldn't be wrong to buy against the 90 level in hopes that we get above 90.23 and push to the upside. That's what trading's about. It's about risk defining and leaning against certain levels. So this video was more of a educational video, perhaps a time when I can get on my soapbox and try to implore upon you to do what you're supposed to do at certain levels. It's all a guess. At times, we don't know if we're going to break below the 0.8982 level and head on down to the 200-hour moving average. But traders who bought this level right through here, they're feeling pretty good right now. There you go. I look at the dollar versus Swiss from a technical level and some lessons in trading. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.